Hey everyone, guess what? Exercise 2 hours. I give myself a treat after 3 double Doji trades this morning. The market was kind and so I get some time outside. And what a gorgeous day it is. Cold, but beautiful. Like my mum. There we go. She didn't like that comment. What is it about compliments people don't like? I don't know. Anyway, onto the trading. Let's have a look at what happened this morning and why it was so good. And you know, when the market does what you expect it to do and you've got a strategy that works, then you can trade with confidence. There's no negative emotion and you just do what you need to do. Set a profit target, take profits there, don't get greedy, and have discipline to stay out when there's nothing there for you. Anyway, like I say, let's have a look at what went on. Halfway through, and hat hair. But what a view, eh? What a view. Worth the walk, and the sun's still shining, and it's fantastic. Get yourself out there. Here we go. So this is the morning action on the DAX, early morning. And you can see from the left hand side of the screen, this is the 5-minute chart, and this on the right is the 1-minute chart. I've got the blue lines are the 8 exponential moving averages, and the red lines are the 20 exponential moving averages. And as you'll know, I like to take my trades from when price reaches one of those levels. So when the market opened this morning and started bouncing down off the 8 and the 20, then you can guess what my preferred trades were at that point in time. So the market went down and big breakdown. Now this here is interesting because that is a gap. There's a gap between the low of the previous candle and the high of the following candle. That's a gap, and so that's a downtrend. But when the gap is closed here, as the market goes up, and the market failed to make new lows by leaving big tails down here, then you've got higher highs and higher lows. You've got 1, 2, 3, 4 consecutive higher lows. So that, that combined with the fact that there's no congestion here means that price finds it easy to travel through these areas back, and it only then was halted when it reached the low of this congestion area here. So see congestion again here, and that caused a reversal again. So you had price moving up, higher highs, higher highs, higher highs, and then it started producing lower highs and lower lows. And this body here shows that made a high, tried to make a new high and failed, so that's a lower high close as well as a lower actual body high. And so the market started moving in a downwards direction from there. So I have several different methods for trading this type of price action, and one of my favorite trades is the double Doji trade. 3 of them here, and I trade them on the 1-minute chart. So I've got the 5-minute chart moving up. You can see in the movement here, the 1-minute chart is making higher highs, higher lows, already started doing that, and a big green candlestick followed by a slightly smaller red candlestick. Okay, and when that happens, then you're likely to get green continuation. Big green reversals, smaller red bars in reply means you're likely to get a green move upwards. And so one of my favorite type of price candlestick chart action is the double Doji in a pullback. And now, sometimes you get the price going right up here, and then you get the double doji in the bottom. But this is still a pullback. The price is going up and making higher highs, and the price is also quite close to the exponential moving averages, which is what I like to see. And you can see that actually this was a triple doji, 1, 2, 3 very small bodied bars, and price moves in waves, waves of highs and lows, but also waves in terms of volatility. So you get high volatility followed by lower volatility, followed by higher volatility, lower volatility, etc. And this is shown on each time frame. So when you get low volatility in 1, 2, 3 bars here, and then you get a break, then price starts going up, and it'll move up quite quickly normally as a consequence of being sterile for a short period of time. Everybody who's watching the 1 minute chart here knows that the price is going up, so anybody who went short gets out, that's a buy. And also people who went long here and made a profit will buy, and also people who were in profit from trades down here, when they see a breakout, they'll add to their positions, some of the more experienced traders. And so they may have, in a wave up like this where there are several higher highs and several higher lows, they may have 2 or 3 or even 4 positions in the same direction, and they all get out at once when price starts moving down. So tiny bodied bars, that's what double dojis are. And in here you've got a pin bar followed by 2 bars with the price body in the middle, the open and the close very close together in the middle there, and it's followed by a big green bar. Now I normally look to get at least 2 to 1 from these trades, and you can put your stop down here, entry at the high of this second doji here, and price went up, of course. So just to recap, I waited for a big response from the bulls, which we got in this big engulfing candlestick here. The uptrend to commence, which it did, higher highs, higher lows, and then a candlestick pattern at value at the EMA here, and then up. So that was a good trade, and you're looking for at least 2 to 1 on these trades, and you can see within 1 minute we'd got 2 to 1, and it's possible 4 to 1. And then of course big gap here between the bottom of the price bar and the exponential moving average meant that the price had to drop down towards value, and then of course it went up again, but only temporarily. And then we had a lower high here, so higher high, and then a lower high, and another lower high, and a lower low here, that was lower than that low, and then a lower low here. And so actually people are beginning to sense that this downtrend is recommencing here. So the price went up on the 5 minute chart, and see the green body here has a lower close than the previous green body, and as soon as that bar crosses these lows here, then you're in a downtrend. And then it's a question of looking out for candlestick patterns that meet your system's requirements, and you can start going short. And we got a good move down, small pullback here, followed by trend continuation, lower low, pullback, double doji, and off again. And so that was the second trade, and this is the 13,800 level, so good time to get out here, but just about 2 to 1 on that trade, reward to risk. And then this isn't a typical, you look at these are 2 pin bars, no bodies. Basically the price opened and closed at the same level, and with tails on the top. These are traps, traps here at the bottom and traps here. Now no traps on this one, but because the price was going down as as it was making lower lows, lower highs consistently. Anything close to the exponential moving averages, and with small bodies qualified for me for a double doji pattern. And you can see 1, 2, 3, 4 similar lows, and when that low was broken at 13,800, the entry was there. And then I've just come out of the trade now down here. So 3 good trades and then a nice break before I come back to my charts later in the afternoon for the US Open. And I'm excited about that too. It's a Friday, and it's, you know, people say, oh, Fridays are the most difficult day to trade. The thing is, once you've got a system, you know, if price had gone up here and I didn't get any pattern that fit my system, I wouldn't have taken any trades. And so I'd have ended, you know, and back down there, no trades. I would have taken no trades if I didn't get a setup that fit my system. And that's a bit frustrating because you're spending time looking at the computer wanting to make money and you can't. But that's simply the way trading is. And then you come back later and you may get 2 or 3 opportunities, and they may be similar to this or different, but they may be, you know, as long as they're proper opportunities that fit my system, I'll take the opportunity and take the risk. And as long as the potential reward on my trade matches at least my risk, and hopefully is a lot bigger like these were, then they're worth taking. And you do that on a regular basis, and that's how you make money, and that's how you make a living out of trading. So anyway, I hope that you found this useful, and this is, you know, quite unusual. 3 double dojis within an hour. You may get none in an hour. And that's why you need a system that copes with that and takes advantage of opportunities. So like these, but not necessarily with the double doji within it. And I have systems that do that. So I hope that you found that useful anyway. And my name's Anthony Beardsall. I'll catch you on the next video. Do go ahead and subscribe, thumbs up, give me a thumbs up if you want, and I'd appreciate that. Thanks ever so much. Have a good one. Bye for now.